Hey guys, what's up and welcome to a new Nvidia daily update video. So today, as per usual, let's go over Nvidia. Let's go over what happened today in the markets, right? A bit of a volatile day despite the price action. Well, Nvidia actually going down a decent amount, but yeah, definitely has some volatility today with the Fed, of course, with a rate cut decision of 25 basis points. Tomorrow, we can get a bit more volatility with the kind of secondary reaction to it that the market usually likes to have after these events, especially the potentially bigger ones. Like today, we actually got a rate cut. And of course, well, Friday we have obviously this week's ending triple witching, right? We have triple witching this week as well. So the point is volatility can still be a thing here, so worth mentioning. But with that being said, let's go over the chart. Let's talk about the price action today. Let's talk about what it means moving forward for Nvidia. If you enjoyed, don't forget to hit that like button. This is not financial advice, and I am not a financial advisor. And of course, again, I have a YouTube private membership section where, again, if you're interested, that link is in the description of every single video. Would love to have you there, guys. I'm constantly sharing posts, updates, thoughts, technical analysis, options flows, etc. there throughout the entire trading day, every single day as the market is open and trading. All it is just $3 a month for my first tier. All my Tesla updates. $5 a month is my Tesla plus Nvidia updates. I should also mention the first tier includes broader market updates. And then, of course, we have tier 3 for $7 a month. Includes non-Tesla, non-Nvidia, non-broader market updates. So other individual stocks, essentially, that I see opportunities in the market that I share with members. And of course, from there, we also have access to the private Discord. But jumping into it. Nvidia down 2.6%, we'll say, on the day, closing at 170 and change on the day, right? So definitely a bit of an underperformance, right? There's some negative news that came out regarding the stock about them being able to sell their chips, I believe, to China. I think China banned them or something. I didn't really see the news. I just heard very briefly about it, but that explains the dip. So what is happening, right? Is the stock now bearish, or is there still a chance, right? Well, there is still a chance, actually. And this is the final chance, in my opinion. So obviously, we were in this potential, like I said, potential bullish flag pattern, right? It had potential, right? But again, we never broke out, right? This is why sometimes waiting for confirmations like that is important, right? To avoid scenarios like this, right? Sometimes I do like to enter near support, but you do risk a gap down like this, right? These things can happen, unfortunately. So we never got the unfortunate breakout. So that bull flag theory is, no longer a thing, right? That is no longer a thing. So far, we are seemingly potentially still looking to make that fresh lower high. But there is still hope for the bulls. And this is the last hope, right? So again, we got the rejection of the green fibs, lower high. This could turn into a lower low, and we could just continue trending down to my 150-ish target. That absolutely is a possibility, especially if we start losing. Again, pretty much 169 to 170. Like I mentioned before, this was a previous area of major support and resistance, right? Very, very crucial level. And we came down right into it. I was sharing this with my members the entire day that, hey, guys, this level is important. Make sure we hold it. This is good. This is technically support right now. But if we lose it, that's bad. We held it. Barely, but we held it. So moving forward, there's a few things. Finishing off the bearish thesis. If we lose this level, like I said, 150 is the next play. And unfortunately, 174 with the EMAs right there above it is now resistance, right? So any move to the upside, watch for 174 again. Any move to the downside, watch for, again, 169 to 170. That now becomes, once again, that sort of level that we're trapped in, that sort of $4 or $5-ish level. Let's continue monitoring that in the days to come. Very, very important. Now, the bullish side, right? What is the bullish side suggesting here? The bullish side here is suggesting the fact that, well, we did drop into that final level, but this is still a level for the bulls to potentially turn things around. It's not impossible yet. Now, we are right at the 50 EMA. We're holding right around it, which is fine. Obviously, the 921 are going to be bearishly crossed, but I only get really worried. Like, to me, the only time the bearish crossover really matters is if they both get under the 50. That's where I start getting much more worried. We're not there yet, and there's still time, right? There's still time. So with that being said, there is still room to left looking for bullish opportunities, right? And the bullish opportunity that the bulls have been presented with, in my opinion, again, their final shot here at redemption, if you will, or else, we do come down to 150, in my opinion, not financial advice, is this bullish head and shoulders pattern. Again, left shoulder, kind of the headish area right around here. Sorry, not the head, the neckline, I should say. The head down here, right shoulder. What am I saying? Do I even know what this pattern looks like? Right shoulder down here, left shoulder, head. Sorry, I'm not even thinking. And the neckline being somewhere around the sort of 180 to as high as 183-ish range, right? I completely lost my train of thought. But that's sort of the pattern, if you will. That's pretty much setting up, right? Left shoulder, head, right shoulder, neckline. Pretty much the pattern. That's the head and shoulders pattern. It is a bullish pattern, but it also implies the fact that I really would not want to see today's low break again. If we start seeing today's low break again, if we start closing daily candles below it, pretty much 2 days low, that would be a concern. That would be a red flag, and that would start really nullifying pretty much the final bullish potential that the bulls are being presented with here, right? So let's continue monitoring that. Now, if this does play out, right, ultimately with the bulls, to truly trigger this pattern, you pretty much need to break out of the neckline. Like I said, the neckline, you can argue, is pretty much around, 180 to 183, roughly, that $3-ish range, or you can make an argument that the neckline is kind of like something like this right here, roughly, right, give or take, right? That looks something like that. You can even make an argument that breaking past this trend line is already potentially, a good sign of things to come. I personally would prefer to see 180 to 183-ish broken, personally speaking, because that also means it broke those green Fibonacci's I mentioned, which, is a major concern for me, right? And this, that's not something I can ignore. I really would like to see those green Fibs taken out, right? And if we take them out, we also trigger this bullish pattern. That will be very, very bullish, right? So if the bulls can do that, very bullish, and I think we see well into fresh all-time highs, right? Very, very bullish. But we still have the bulls have work to do, essentially, is what I'm trying to say. So let's continue monitoring how this pattern develops over time. Again, this is the last chance. Losing this range, losing today's low and closing below today's low, losing these levels that are important to hold, will also mean that these EMAs right here will most likely get that bearish crossover. The 921 will go below the 50, which usually to me is a massive warning sign. And then we begin the downtrend, essentially, in my opinion, at the very least, to retest previous all-time highs around the 150, high 140s, something like that, right? And we begin that sort of downtrend to that range. So let's continue monitoring that, guys. Very, very important, crucial levels to hold, but the bulls, they're not out of the picture yet. Not just yet. They still have a shot here. So let's see if they can pull through with it or not. See if the 4 hours, the 4 hours not really saying too much, right? We have the 4-hour SMI peaked at the top here. Now it's coming back down to the bottom. It's not impossible. It's definitely not an impossible situation here for the bulls to salvage. I definitely don't think it's, it's completely unheard of. So let's see if they can do it or not. Technically, the risk reward, in my opinion, actually down here is not even atrocious because, technically if you enter right around here and your stop losses, let's say, you give it a bit of wiggle room, 168, I mean, how much are you risking? You're risking, technically speaking, from around this range, 1.5%. It's not atrocious, really. It's not atrocious. And if this pattern does ultimately play out, it's obviously a much higher risk buying down here, expecting this pattern to play out without any confirmed breakouts. But, with the risk reward not being that atrocious, you are technically risking 1.5% for this pattern that truly plays out and you kind of get to see into the future and, it does actually play out the way you expect it to. You can get, an easy, like maybe 10 to 15%, right? Depending on how high we actually go. It's not a horrible risk reward, to be completely honest with you. But I would like to see more. I would like to see how the week closes out personally, especially 174 is a bit of a resistance now. So, let's continue monitoring that. The bulls are definitely not out of the woods by any means. The bears, in my opinion, are still more in control than the bulls overall, mainly because of structure. But like I said, this is an important pattern the bulls have been presented with to try and turn things around. The broader market update, like I mentioned in the Tesla video, we got that final pullback, like I mentioned, to pretty much that initial previous all-time highs right around here, in the mid 4 or 580s, right at that 9 exponential moving average. I mentioned that the volatility can potentially bring the markets back down to that range. We did, and we actually got bought up pretty nicely. So as long as the market doesn't lose the exponential moving averages, as long as we essentially don't lose this previous all-time highs, it's still looking bullish, right? I don't see any major concerns, at least not as of right now. So as long as those levels hold, I still lean bullish for sure. So let's continue monitoring that in the days, weeks potentially to come. Second half of September is historically the worst 2 weeks of the year, I believe, for the stock market. Maybe seasonality doesn't play out this time, right? Seasonality has been kind of finicky lately, so we could maybe push things down the road. Maybe it'll be in October. Maybe now maybe it's not that bad second half of September. Maybe now we actually are pretty bullish into the end of September, and now everyone thinks maybe the worst is behind us, but then October is the bearish month. You never know. Seasonality has been very finicky lately. So you want to take things into account like that, right? And just go off of the levels, let the chart decide for us. So the main 3 levels I'll be looking at to the downside as, increasing in warning sign levels is losing this previous all-time high right here, essentially pretty much roughly 2 days low, and losing the exponential moving averages. That'll be sign number 1. Number 2 is pretty much this sort of 575-ish range. And then the bigger one would be definitely losing this sort of 560 range. Those are my main sort of 3 levels to the downside that each is increasingly more worrisome. And in my opinion, if we ever lose this level down here and it's not a sweep, I do think we'll come back down to retest previous all-time highs all the way down here, closer to 540, high 530s. But as of right now, nothing is suggesting that that's the case. And as of right now, the bulls still seem like they're in control. They're not really giving up just yet. So let's continue monitoring it moving forward with the days to come, potentially weeks to come as well. Options fall on Nvidia. Slightly more bullish than bearish, you can see, but a little bit more muted today. It feels like other stocks are stealing the spotlight. Very bearish flow to start off the day, which explains why we had that initial drop, I guess. And then slowly the bulls started to return. Then it got kind of mixed. But towards the second half of the day, the bulls definitely came in stronger than not. So that's a good sign. Saw a lot of shorter term calls coming in over here for 172.5, 170 strike for next week, the week or this week, the week after. So the bulls are trying to step in here to try and make some money off of this potential bounce, maybe to 174. So let's see how that plays out. But all in all, that's all I got for you guys. Let me know what you think down below. And as usual, I'll see you tomorrow. Peace.